Unlocking Financial Freedom, an Autarky Capital Guide. Welcome to Learnova Tech, where we break down the core principles of financial literacy to help you build lasting wealth, break free from financial struggles, and take control of your future. This video will challenge traditional views on capital while providing actionable strategies to transform your financial reality. Let's get started. Number 1, the illusion of job security. Many believe that working harder leads to financial security, but inflation, layoffs, and rising costs prove otherwise. Relying on a single source of income, like a paycheck, is risky. If that source disappears, so does your financial stability. So, how do you create multiple streams of income through investments and entrepreneurship? 1. Acquire cash-flowing assets. 2. Build businesses. 3. Let money work for you. Leverage debt wisely. Expand your financial education, and seek a trusted advisor to guide your journey. Example: Sarah, a corporate employee, lost her job due to downsizing. But because she had been investing in rental properties and dividend stocks, her passive income covered her expenses. This financial cushion allowed her to transition into entrepreneurship with confidence instead of panic. Number 2, understanding the cash flow cycle. Most people trade time for money, but the wealthy make their money work for them. The financial trap is earning through a job, paying bills, and saving whatever remains, if any. Instead, a smart cash flow strategy prioritizes investing first, building assets, using passive income to cover expenses. Example: instead of spending an annual bonus on a new car, Lisa invests it in a high-yield stock portfolio that generates monthly dividends. Over time, her investment grows, and she can afford the car using passive income instead of debt. 3. Assets versus liabilities. What's the difference? Assets put money in your pocket, for example, rental properties, dividend stocks, businesses. Liabilities take money out, for example, car loans, mortgages, credit card debt. Many believe their home is their greatest asset, but unless it generates income, it's actually a liability. Example: Mark buys a home and rents out a portion as an Airbnb. His mortgage is $1,500, but he earns $800 per month from rentals, reducing his housing cost and turning his home into a semi-asset. Number 4, the tax code favors investors and business owners. Employees pay the highest taxes because their income is taxed before they even receive it. Business owners and investors legally pay less because they can reinvest profits and benefit from tax deductions. By using business structures, real estate, and financial planning, they minimize tax burdens. Example: a freelancer registers an LLC and writes off business expenses like home office or travel. This lowers taxable income, increasing overall savings and financial security. Number 5, the power of compounding and investing early. Saving alone isn't enough. Inflation reduces purchasing power. Investing allows your money to multiply exponentially over time. The rule of 72. Divide 72 by your investment return percentage. This equates to the years it would take to double your money. Example: David invests $5,000 annually at 8% interest. By the time he retires, he has over $1 million. Meanwhile, his friend who started investing at 40 has less than half that amount. Lesson: start investing early. Number 6, the investor's mindset, thinking long-term. Avoid emotional investing. Fear and greed drive poor decisions. Successful investors think in decades, not weeks. Learn market trends, analyze cash flow, and seek high ROI opportunities, or find an expert who can. Example: James buys undervalued real estate during a market crash. 5 years later, the market recovers, and his properties appreciate significantly. 7. The importance of financial education. Most schools don't teach money management, so it's up to you to learn. Financial literacy includes budgeting, investing, understanding taxes, and cash flow management. Your income doesn't determine wealth. Your financial knowledge does. Example: Emily earns 6 figures but lives paycheck to paycheck. After taking a financial literacy course, she restructured expenses, invested, and built an emergency fund, securing her future. Number 8, leveraging debt wisely. Not all debt is bad. Good debt builds wealth. Good debt are real estate loans and business financing. Bad debt are credit cards and car loans. Learn how to use leverage to acquire assets instead of liabilities. Example: Mike takes a $1,500 per month business loan to open a laundromat. The laundromat generates $4,000 per month profit, creating positive cash flow. This is good debt in action. 9. Make progress. Your financial future is in your hands. Create a plan. Identify liabilities, cut expenses, shift income toward assets. Build your investment portfolio, step by step, or find an expert who can. Financial success isn't about working harder, it's about working smarter. Breaking free from the paycheck-to-paycheck cycle by focusing on assets and investments. Commit to financial education, make strategic investments, and build passive income streams. Your financial freedom starts with one decision. What will you do differently starting today? Comment below. What's one financial habit you're changing this year? Subscribe to Learnova Tech for more financial literacy insights.